Good morning, everyone, and welcome to the Quantum Leap morning homework session and trade level setup for January 31st, 2014. Can't believe it's the end of the month already. January has gone by very quickly. For those that are joining us new from Twitter or watching this video on YouTube, this is Quantum Leap. We are a self-organized learning environment. We come together into a private Skype room and talk about the market, talk about trading, talk about ideas, and basically learn together. And then each morning we come together into this live go-to and do our morning homework and set up for trading day with our trade levels and our targets for probable location. This is a private Skype room. If you want to come and check it out, you will need a Skype account, and you can contact me. Send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. I am the founder and head moderator of Quantum Leap. Now, if you're watching this on YouTube, you might want to skip ahead a little bit. We go through a morning routine, which includes looking at the macro to the micro in terms of key numbers, and then we look at the macro to micro in terms of trend. And this is just to get us prepared for the trading day and just to remind us where we are within the context of the market. But before we do anything, of course, as usual, we have to get the disclaimer out. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than the initial investment. Anything that you see in Quantum Leap is for education purposes only. Please do your own due diligence. Past performance is not indicative of future results, and no one at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized operating environment or learning environment. Okay, so let's quickly go and take a look at the numbers. Well, we come down and tested this very, very key level on the composite. It is a major composite low volume node or long-term price rejection at 1764. We're currently trading just above it, I believe, but we did go down overnight and test the 1761.25. So we have breached this number for the first time, from the time that we broke above it and went up and made all-time new highs. So 1764. Key level today, below 64, you want to be short. Above 64, you want to be looking for opportunities to get long. Of course, the next big number below us, there's a couple. There's a 1756.50, I believe it is, which is a naked VPOC. And then, of course, a very important number below us is the month low from last month in December at 1754. Of course, we are below, and we have a negative year going so far at 1837.75. We're below the open of the year, so we are in a bear market right now. Nothing else on the macro numbers, just taking a look at what transpired yesterday. We had a Globex open at 1770, a Globex high at 1785, Globex low. We did come down and test the lower level. You can see we've been trending lower on our Globex lows. Again, you're going to see a lower number for today at 1761.25. If that turns out to be the low in the Globex, it could go lower, but this is trending down. So we are seeing some serious weakness coming into the marketplace. And then we opened up out of range yesterday at 1784.25. Came down and tested the value area high, and then as our main hypothesis, we rotated back up and tested some of those levels above. We had normal variation. We broke the IB to one side, which was to the upside. 2.25 point opening swing, 84.75 high, 82.50 low. And then our initial balance high, 85.50, which was a key level that we were looking for. It was just below that target at 1786. That was our initial target for yesterday, and then initial balance low 1778 for a 7.5 point initial balance. We did get a bit of a bounce yesterday, so all our intraday RTH numbers were slightly higher. Our VPOC was up at 1790 and a quarter, and then we closed right around balance, that key microcomposite VPOC and CHVN just around that 1781.50. So we rotated and ended up back in balance. But overnight we've seen some weakness come in, and we've fallen out of that balance. So it should be an interesting day today. Our ranges are tightening just slightly. We did have a higher value area high and value area low at 93 and a quarter and 83 and a quarter. Keep an eye on this 83 and a quarter for today. It's likely to be our upside target for the day. And then again, we broke the IB outside of the pocket again yesterday. So we're getting those late initial balance breaks, that we saw earlier in January. Going over to the daily report, so far our low, I believe we haven't gone lower. Let me just check to make sure. Yep, 61 and a quarter low and 85 and a quarter high. So our 20-day full session, again, these change during the course of the day as we extend the range, but our current full session 20-day ATR target is 1780.50 to the upside and 1766 to the low side, and of course we're trading below that, so we were extending the ATR target for the full session, and then we'll take a look at what that looks like for the RTH session. In terms of news today, we have or had, I should say, Canadian GDP, core PCE, employment cost index, personal spending, personal income. We saw some weakness coming in. Now we do have Chicago PMI. Oh, that was just put out. And then we have the University of Michigan consumer sentiment and inflation expectations coming out at 8:55. Remember, that's a subscribed news, so sometimes it goes out a little bit early. So just be careful on the open today. So let's take a look at the trend macro to micro. We keep talking about the 1754 and coming down and testing it. Of course, a test of the 9 EMA on the monthly will bring us down into that 1050, 1711. We're losing a little bit of a slope here, seeing a little bit of weakness, but I mean overall the the macro trend on the monthly is nowhere close to being violated. So the trend is still up on the monthly. Going over to the weekly, we do see some weakness coming in. We're currently trading below the 20 SMA on the weekly. We've lost some slope and separation, so we are seeing this weakness coming in on the weekly this week. Going to the daily, of course the picture is a little bit clearer on what's happening. We've got slope and separation to the downside on both the 9 EMA and the 20 SMA. We had had that big Friday down move, and then sort of consolidated, came up and closed this technical gap, rejected the 9 EMA from below, and have currently moved away from it, and we're seeing some weakness coming in on the daily. Just taking a look at the geometric chart, I'm just playing around with the forks right now. I don't think this is really too valid of a fork yet. I want to do some research. I'll have something more definitive for you guys on Monday's session. Of course, we did come down and hit this energy point at 1781.50 area. We've got another little energy point here that is showing for today at 1785.58, which is interesting because we have a naked cross at on the 30-minute time frame at 1785.75. So we'll see, if they find some buyers down here. We get back up above 64 and take a run towards this 1785. But other than that, we are below the center line of the downward sloping fork, and we're broken out of the long-term upward sloping fork that we've been watching now for months. So we are seeing some weakness coming in here, and looks like we could get a further move down. So let's take a look at the overall macro on the composite. So we had broken out of this balance that has the microcomposite at that 1781.50. We came up and put in the all-time high at 1846.50 and the year high at 1845.75. So we have a lower high on the composite, and then we fell out of this balance. We came down on that Friday down to this 1781.50 area, and we've been chopping around in this distribution. We've been watching the 64 level very carefully. It is our microcomposite range low, and then just basically chopping around. We did get a shift now on the microcomposite VPOC. It was up at 86. What was it? It was. Come on. I might have some data issues here. It was up before yesterday. It was up at 1786.50, I believe it was, but it has shifted down now to 1774.50. But the key area that you want to pay attention to is the 64. We've come down and tested this first CHVN in this area below. We're, if we get below 64, we're coming, into this prior balance area where we broke out. The microcomposite VPOC down here, which remains naked, is at 1752. Again, we've got another naked VPOC from a daily chart at 1756.50. Value area high in this balance area right here is 1768.75. Balance area or value area low is 1746.75, and basically you've got this distribution zone between 1746 and 1764. And as I mentioned in numerous homework sessions, the last couple of days, is once we get down in this area, this is a very choppy looking composite, which means there is a lot of undetermined fair value, so there is likely to be a lot of chop in this area. So it's going to be a really tough area to trade once we get down there and we start chopping around until they determine and figure out exactly where fair value is. But the key is the drift will be down towards this 52.25, but expect it to be very whippy, very choppy down here, and a push through to the other side of the balance will bring us down to that value area low, and the other side of balance down here at that CLVN at 46. Below that, I would look for a really quick move down into this 43.50 to 42.75 as weakness, and they accelerate the downward move, and probably come down and test the 1736 area. But we've got that big target below us, which is the next big destination once we break below 46 down here at 1732.25. If we stay above 1764, I'd be looking for a move up to to test the value area low of the balance that we just broke out of up here at 1768.50 and the 1769.50 CHVN. Value area of the larger balance is up here at 1772 with that new maker composite VPOC up here at 1774.50. So this really is the main target above 64, with the extended target up here at 1781.50, and then we've got that naked cross at 1785.75 that we were talking about. So let's take a look at the overnight and move our numbers and start putting our levels out. So you can see that we opened up in the lower distribution from yesterday. We had that big flush late in the afternoon. I was busy with some meetings at the time, so I'm not even sure if this was news related, but we had traded during the course of the day and drifted up, and then we shifted the VPOC up to that 1790, but then we came down to test it again, and they flushed it into the close, and we had this strong move down into the lower distribution, and coming down and closing at the 1781, so right back into that balance around the microcomposite VPOC at 1781.50. So we came back into balance again, and then for the most part, overnight we just rotated around that balance, and then obviously once Europe opened up, they just sort of sold off, and we started drifting down, and we came down and found some support down here in around that 64, and we had a VPOC shift overnight down to this 1765 area. So our overnight VPOC is actually shifted down to 1765. So let's put our numbers over into our chart. Obviously, we're going to be opening up outside of balance. The range high for the overnight session here is 1785.25, right below that naked cross at 1785.75. So we'll go and put that on our chart. And our overnight low is currently 1761.25. And our overnight VPOC is just above that CLVN at 64 at 1765. So get rid of this chart. We don't really need that. Bring this out so we can see this a little bit better. All right, so we're going to open outside of range, outside of balance, and we're going to have a pretty big gap. Let me just move this to the back. We're going to have a pretty big gap, almost a almost a 10-point gap. So, and we're going to be opening up just below the range low from the 29th and right around this 64 key CLVN. So I mean, there's no doubt in my mind that the 64 is going to be a trade level. And again, if we can hold above the 64, you want to look to get long. First target above is going to be the 69 area between 68.50 value area low of the microcomposite that we just broke out of, the CHVN at 69.50, and the value area low from the 29th here at 69. So my first trade level above an initial target is going to be in that 68.50 to 69 area. And then above that, look for the move to come up here and take out that naked close from 29. I mean, we traded down through it, but because it's an RTH number, it is still a naked close. So we're going to have that as our initial target here. And then we've got the naked VPOC from the 29th as well up here at that 74.50, and also now our microcomposite VPOC as well. So this will be the secondary target, and this is where I would look for responsive sellers to step in and sell us back down towards this 64. If we get above 74.50, I'd look for the continuation up to the value area high from the 29th and the range low from yesterday down here at 78. So this will be a trade area. And then, of course, if we can get into the prior day range, I would look for a rotation up to close yesterday's gap down there at 1781, and getting back into this lower distribution for yesterday. Now the key LVN from yesterday is going to be this 1785 area, which keeps coming up, which is basically near or just above the value area high on the microcomposite. So this would be for me an extended target, and I'll just put it in as a target right now, but before I post the charts, oh, come on. For some reason, it doesn't want to draw it. Unless it's drawing it and I'm not seeing it. Anyway, I'll patch that up. And then, if we do get beyond this area, which I'm not anticipating, then I would be looking, we've got a double distribution from yesterday, so we're likely to, if we get above the key LVN here, we're likely to get a rotation, up into the upper distribution and come out and test this 1790 and a quarter up here. So that'll be, call it a double extension. And again, I don't know, there we go. Now, more importantly, we've got to look below, because with this weakness and a breach of the 64, this is likely to give us a move below. So obviously the initial target below is going to be this 1761 and a quarter. We've got 96% probability of taking out the overnight high or the overnight low, and considering that the overnight high is all the way up there at that 1785 level. If we break 64, I would say get short, sell till your hands bleed into the 61 and a quarter, okay, with possible responsive buyers stepping in there at that first CHVN like they did overnight, and rotate us back up through 64 and see if we can hold above it. But if we get extension below that, then we're getting into this distribution area with a lot of undetermined fair value, and I expect a lot of chop down here. But your initial target below has to be this 1756.50, which is that naked VPOC. And then, of course, you've got the month low just below it at 1754. I'd be looking for buyers to try to step in there and hold us inside of last month's distribution, and then the big number below and anticipated rotation below 64 is going to be down here at the 1752.25. So this will be my my main target below 64 for the day. And then the other side of balance is down here at that 1746, as I was mentioning, which is that value area low from the microcomposite around the microcomposite VPOC at 52. So that would be a trade area that I would look for extension. And then just to, come on. And just to put a major target below, we've got that naked microcomposite VPOC, and you see it was an extended target, for a prior, trade day that I didn't take out, but it's still 1732.50, or yeah, 1732.50, and then we've got a naked VPOC just below it at 1727.75. I'm not expecting to come down here, but if we do get below 64 in the RTH session, sell into the 61 and a quarter and 56 with a target down below at 52 and a quarter. So let's take a look at what that looks like so far on the Keltner channel. You can see that that 64 happens to also be the Keltner center line. We've closed back above it, and it looks like we're going to get a a second Renko close above it, so seeing a little bit of strength coming in the market right here. Test of the upper Keltner is going to bring us up to 1770.50, or likely, towards that target above at the 1771.50. If we get below the Keltner center line, a test of the lower Keltner channel line will bring us down into 1758, but more likely going down and hitting that naked VPOC down here at 1756.50. Let's take a quick look at what gold's doing. Gold fell out of this balance that we were watching. It got below that that key area that we were talking about at that 48-49 area, rotated back down towards that 42, which was our main target below, found some responsive buyers down there and taking us back up, and currently we're above that 49.75 CLVN and trying to get back into this upper distribution up here. So I would say that you want to use the 49.75 as a key level to trade. If we can stay above it, I'd look for that rotation up through to the 57 and the microcomposite VPOC of the balance that we broke out of up here at 1261. Well, actually, if we hold above this 49 level, I'll actually bring these 2 days into balance. Let's just take a look at what the most accepted price is for the last 2 days. So it's down here at 1743, which is right in around that 42. So below 49, look for a rotation back down towards this 42, 43 area. Above 49, look for a rotation back up towards this 58 to 61 area. And again, I'm not expecting a big move in gold. I still think they've got work to do in this area to define the auction better. But pretty simple strategy on gold: long above 49.75 into the 57 to 61 area, short below 49.75 into the 42 to 43 area. That's everything that I've got. Howard, are you going to? Do you have anything for us today?
Yeah, I can cover a couple things.
Okay, so we'll go over to Howard.
Okay, so looking at the weekly chart, we are currently testing below the weekly 20 SMA. That's a very key level. We've tested a few times in the past that have had very few closes below it. So this being Friday, this will be a key level to be watching for today. Let's go for the daily charts. So in terms of structure, from our high of the year at 1846.50, we've had a three-wave structure lower. We had a retracement, didn't break the high, and now we've got another move lower from there. So it could be a 1, a 2, a 3, a fourth wave retracement, and we've made a new low, so this could be a fifth wave down. But all this could still be a corrective structure from the rally. It's been a stronger one, but the structure so far could indicate that we're still in a corrective mode. I had a fib target here at around 1772. I believe that was the balance area, value area low, if I remember correctly. And if we get extension from there, my next target below is at 1749. So let's look at market breadth. So this is the chart of the sectors, and from yesterday, most of them have turned higher, Looks like home builders here was flat to slightly lower. So right now it's utilities and healthcare that are battling for the highest sectors so far this year. And they are right around 2% above their open. All of the other sectors are still well below their opens here. So now we'll look at our advanced declines and our up-down volume. So this is yesterday. We had a slight push higher in those two indicators, the middle chart being the advanced declines on a 10-day average basis. The lower chart is the up volume versus down volume on a 10-day average basis. Blue is NASDAQ, blue is new NYSE, red is NASDAQ. And we're still moving lower, indicating that market leadership is thinning. As we're going lower, more and more issues are declining than advancing and have more down volume than up volume. This line here represents the break-even 50% level, where advancers would equal decliners, and up volume versus down volume would also be equal. So we hit our high on these two indicators back on the 27th of December, about a month ago, just prior to the all-time high. And so price and these indicators have been moving together since then. And if we go a little further back in time, the highs in these indicators actually occurred back on October 22nd. And price continued higher, market breadth waned. We did have a bit of a push up during this period here, where we formed our new high, but it still formed a lower high in these indices. So this high here and this lower high, showed a non-confirmation between the market and overall market breadth. So that's all I've got, Doug. We've got about 12 minutes left to open. I'll turn it back over to you.
Thanks, Howard. That's going to conclude our daily homework session. As always, trade well, trade safe. We're finding a little bit of strength right here. We got our second Renko close above the Keltner, but look for a possible rotation on the open down to test that 64, and if we get below it, sell into that 61 1/4. Should be a good trade with possible nice extension down. As always, trade well, trade safe, and we'll catch you on the flip side.